That's one. Look, that is one point. I mean, within an FX ecosystem, everyone has to have a profitable business, right? A lot of people try and get their execution costs on LMAX Exchange to zero. Great, but then how do I pay the 150 people I have in 11 countries? Everyone has to pay for something. You pay the algo desk for execution as you'd expect. You pay for clearing as you'd expect. But how wide does it go? Look, all I can say is I compete day in, day out with ECNs that have last look. Typically, if you've managed your flow correctly, I can compete with a last look spread. If you manage your flow incorrectly, so you want to dump, I don't know, a yard of euros in a heartbeat and smash everything, look, next time you come back, probably my spread's going to be obliterated. So it's all about the ecosystem working together. The best algos, so typically with a bank, I'll have 3 algo streams. A very soft one, a medium one, and a sharp as hell one. Ultimately, you hit different prices, right? And fill rates will be different. The guys that think they're smart come along and say, yeah, my flow's soft. Do a yard of euro on the soft stream, and then the price isn't there for them tomorrow. So it is possible to compete, to see the same spread, but more importantly, it's always more cost efficient to trade with that last look. One key benefit is price improvement. Okay, in a central limit order book, it's natural to get price improvement. With last look, there's never price improvement. Doesn't have to be. You trade at limits, right? Whereas if you send me a limit and there's a better price, I'll fill you there. That added to the opportunity cost. So I think it doesn't have to widen out very much, but you might be talking tenths maximum if you looked at a major. But ultimately, over time, that becomes the spread. Mm.
And if we flip and reverse the question, then how much does last look cost, do you think, to those who use it on the buy side, compared with like a firm?
Yeah, so a lot of research that we've looked at, and also from TCA, on any individual fill might be $50 to $100 a million on that last look order. But if you have,
and that's just the impact of last look.
It is. Now, for us too, like if we're trading significant size into the market, the cost of information leakage is much, much higher, and that's one of the things that we always want to be conscious of.
Is there any way to measure that at all, or estimate it, or give some kind of a, an estimation of what that might be, how much that might be costing people?
Well, depends how much they do, right? So we did it. Look, I'll throw that out there again. We wrote a white paper in 2017, and look, you all know that averages don't always work, but typically for every client we looked at, the lowest benefit to them was $2 a million. The highest benefit in aggregate was $120 a million. So, but if you show me your trade, you show me your orders for an hour, a day, a week, a month, I can analyze it for you. That's what we do. So we have our own analytics, because we have to try and convince you, we have to try and convince customers that it's more cost effective to trade with that last look. So we can do it, Andy can do it, depends how much you trade. But I've seen numbers out there that some customers, it's costing them $50 to $60 million a year. And that doesn't surprise me. If you imagine it's only on average $10 a million that's costing you, work that out on the volume you trade. But as Andy said to me earlier, the problem is over the fixes. Amazingly, I do 40% of my bank algo desk flow comes through the fixes. Why is that? Because someone's buying happened just yesterday. You're buying $300 million. Right? But over a few minutes, and my LPs keep coming in. They don't have the right to reject. But there's a reason for that, because the reject at those times is exceedingly costly. And that's why averages don't work. It could easily be $1,000 a million.